Welcome to Keeping It Real, the largest podcast made by real estate agents and for real estate agents. My name is DJ Paris. I'm your guide and host through the show. And today is our monthly series, Learn with a Lender, with a legend in the lending space, Christian Bachelder. Let me tell you more about Christian. He, together with David Green, Christian co-founded the One Brokerage, deemed the fastest growing broker in the nation in 2021 and 2022, ranked in the top 20 brokerages by funded loan volume. Christian's a UC Berkeley grad. He has a bachelor's degree in chemical engineering, but hated the industry and wanted to get out of capped earning potential. Got into real estate with the help of a childhood family friend who had some success in the business and discovered he had a knack for connecting with people and adding value to their mindsets, investments, and journeys. He's a licensed real estate, insurance, and mortgage broker. Christian regularly hosts masterminds, seminars, and webinars with real estate gurus. He teaches people everything from investing principles to how to buy your thousandth property with a focus on what markets to target, how to find the best loan, and how to protect one's investments with insurance policies and other forms of asset protection. He has purchased 15 properties himself in the last 12 months and has an amazing strategy for all of us to consider doing a similar thing. Maybe not that many properties in a year, but certainly buying investment properties. There's a lot of our listeners that have not taken the plunge there, or they just want to learn to work with investors. Christian is kind of an expert in all things investments, but he's going to talk about these same principles that he teaches, he does himself. He created a course for loan officers to enroll in to teach the fundamentals of the sales process, how to become the best advisor possible, how to get the most out of this career path, and tips on succeeding in any market. You may know him from Bigger Pockets or from really anywhere people are talking about lending. Christian Bachelder, his website for the brokerage is The One Brokerage. One is the number one brokerage, theonebrokerage.com. Please check them out and consider using Christian on your next client purchase or your next purchase. He and his team would love the opportunity to talk with you. Christian, welcome back to the show.
Absolutely. Happy to be here.
Yeah, happy to have you here. We got some pretty good news, and I don't really love talking about chasing rates because rates are, at least in the primary home buyer and seller market, I never think they're the biggest driver for activity. Of course, we're not at 3% rates that we were in 2021 and 2022, but we're not at the high of 2023 and even last year. We are currently at a low for the year, and anticipation for the Fed rate being cut next month. And that has hopefully drummed up some interest from buyers who are sitting on the sidelines. And again, it's not a massive rate cut, but you can find rates now in the 6.6 to 6.8 space, which is kind of exciting, I guess, if you were sitting and waiting. So just wanted to get your take on kind of what's going on and what agents should know about it.
Yeah, I mean, the general consensus is the Fed's going to drop the federal funds rate by what will most likely be 0.25% in September. And that's something we haven't been able to say for a while, right? They've kept the federal funds rate stagnant for quite the last few meetings now at this point. And the betting market, so that you guys understand kind of how the Fed operates, mortgage pricing and really all consumer debt pricing in terms of interest rates, they follow what things are projected to happen, not what are happening.
Yeah.
So, like last month, this month, when the Fed says, hey, we're keeping the rate unmoved, the market doesn't really care. They already knew that, right? What they care about is what they're likely to do next month, because lenders price aggressively to get ahead of things. The same thing, I usually compare it to sports betting. You always hear like the lines in Vegas, like somebody, the Lakers are 100-point favorite or whatever, or a plus 100 underdog or whatever the case is, right? What that means is that there's already kind of been an expectation placed on the likelihood of the Lakers winning, right? That's exactly what happens. And books are willing to pay you out based on the likelihood of them winning. They determine them to be either favorites or underdogs. It's the same exact thing that happens with the market. Market makers, these large banks and people much smarter than me, are paid and employed to deduce what the wording is that the Fed uses in their meetings and what is likely based on the market events and market criteria of what the Fed is likely to do next month. And what banks do is they get ahead of it. They set the lines, so to speak, right? And the line has very clearly been defined that a drop is happening in September. These people are very rarely wrong. It does happen. It's rare. It usually happens when things outside of our control happen. The last time where it really happened in a significant time period was COVID. And that's just because nobody knew what would happen when the world's being shut down, right? That's kind of one of those things that you don't prepare for. It's happened usually around wars. It's happened around, major stock events, things like that. But on a typical, not surprising month, these people are good at predicting what will happen. And I am fully under the belief, and maybe somebody will point back to this video and tell me I was wrong if it doesn't happen, but I believe the Fed will cut rates by 0.25% in September, and that's already baked into mortgage prices.
Yeah, it's already moved.
That's correct. So just in the last 2 to 3 months here, as this prediction has kind of started to take place, rates have come down from an average of about 7, which is where they were for just your standard primary residence, down into the mid to low 6s. So you can very realistically get a 6.2 to a 6.5 rate right now on a primary residence, which we have not been able to say for almost a year now, which is some relief. Obviously, it's not back to the 3s and 4s where we would like it to see, but it is some crack in the armor, so to speak, of the at least short-term history unwillingness to pivot of the Fed, right? And it's nice because usually once they start to pivot, it continues that way for a little bit. Usually they don't cut rates once and then not move them again for a year. Usually when they start cutting, that kind of shows their desire of the economic progress, and usually more to follow, right? Very rarely in history has the Fed just made one rate movement and then kept it stable. Usually when they start to drop, they continue until they reach their target that they would like to get to. So I'm hoping it continues after September into the next year, and next year, we'll see what happens. But it's a good first sign. I'll put it that way.
Yeah, I think it's a good opportunity for agents to just communicate what's happening right now, whether their clients are, especially their already existing primary home. I mean, primary home by built or people who already own homes are already at a 3%, 4% potential rate if they refinanced, which they probably did 3 years ago. And now they're probably not looking to move. This isn't, news enough to sort of jump on the ball unless they have to, unless there's a life event. But if there is this need to move in the next 12 to 24 months, if I was an agent who was practicing, I would start calling my sellers, my owners rather, and say, hey, rates have dropped a little bit. There aren't a lot of buyers yet flooding the market, although it's also kind of the end of the busy season. So it might be time to at least start looking at what you want to buy next. Because we know, you can take a look at the data and say homes in your neighborhood with most major markets, are selling pretty quickly right now. Although we did see an uptick in the last month where days on market did increase a bit. I think that has to do a lot with just the end of the sales cycle. We have, kids going back to school, parents not wanting to move as much around that same time, but we're seeing less competition. So I think there's definitely definitely an opportunity there to just have that conversation, say, hey, let's get you on some safe searches. Let's take a look at where your next move wants to be, because there's not as many buyers right now, and yet rates are a little bit lower. We can sell your place pretty quickly based on historical data, and, just have that conversation and get them at least in the mindset of possibly starting to look.
Yeah, 100%. And I mean, it's important to keep in mind the type of properties that you're targeting, right? And who else may be interested in them. This is the biggest thing that I think realtors forget, and really home buyers mainly forget, is if you're targeting a property that, for instance, may make a good primary residence, does that coincide with a property that may also make a good rental, right? If you're looking for a property where maybe you want to do a live-in flip or a house hack, are you looking at a property that may need renovation? If so, you're probably competing with a flipper, right? If you're looking for a property that's in a good school district, are you competing with everybody who has a desire for that, right? So when you're targeting properties, kind of fracturing what your expectations are in terms of I need this, I need this, I need this, can a lot of times give you access to better opportunities, right? Where if you're in one of the markets in America that is very heavy in investments, right? I think of like the Midwest, right? If you're in Cleveland, if you're in Indianapolis, if you're in Memphis, if you're in, these traditionally more investor centric markets, is there a benefit of maybe you going outside into the suburbs a little bit? Is there a benefit to you getting outside of the city center where you may not get as many investors and there may be more opportunity? Now, sure, you're trading off maybe a different school district, a commute to work, etc., but you're artificially limiting the desire for those properties and putting yourself in a better position to get your offer accepted, right? And that's why I think agents, while location, mastery is a part of being a good agent, understanding your market, understanding, all the uniquenesses to the market that you're working in, being able to pivot with your buyers into neighboring zip codes, into different asset types, maybe a duplex, maybe a triplex, right? These things that they may just be opening up their capability of actually getting something into contract because there's a different level of competition, I think is very important, right?
Yeah.
And remember, even though that 6% doesn't look as good as that 4% for you as your primary residence, an investor may love it, right? An investor may look at that property and see the tax benefit. They may see depreciation happening. They may see the cash flow. They may see the value add potential, and they're not buying it for the reasons you are, right? And that's why, getting an agent who can get an understanding of, what interest that property is going to have, maybe somebody who has some experience listing homes in that area, right, is vital to getting your offer accepted. And specifically for the agents, being able to answer these questions are important, right? Like, who's going to be my potential competition on this deal? And how can we make sure that we structure our offer in a way that puts us in the best chance of getting it accepted, right? Very, very, very important.
I'd like to talk a little bit about tariffs only because we're hearing a lot of that currently in the news. Tariffs are finally starting to come to fruition. And I always wonder about how that affects developers, because I always think developers are the canary in the coal mine for sort of knowing what's going on in the housing market. And even though they look for very different things than primary buyers and sellers, it still tells us kind of the sort of the what's the scent of the market at the moment. So what are you seeing and hearing from investors? You work with a lot of them, developers, are they worried about, especially builders, are they worried about tariffs?
Yeah, tariffs obviously are always going to have an impact because of cost of materials, right? Steel, lumber, piping, that it has to come from somewhere, right? And if it's coming from out of the country, which historically a lot of it has, American manufacturing isn't what it used to be, right? We get a lot of our supplies out of the country now at this point. 100% that's going to impact the cost of their development. Now, what a lot of builders are doing, as their end product, right? Their finished houses sit on market and maybe don't have the same buyer pool that they thought they would have when they started. They're offering credits, they're offering
Yeah.
incentives, they're offering lender credits, builder credits, right? And what that means is that they are trying their best so that you guys understand when you see a builder offering, $20,000 in closing cost credit, they're not doing it just out of the, good of their heart, right? They're not doing it because they really care about you as a buyer. They're doing it to protect their sales prices. Because if they instead were to drop that sales price by 20K, what does that do to all of the other properties that they built? Right? That
Yeah.
means they're now establishing the market basis of what
Sure.
that house is worth. And then unit 2 and unit 3 and unit 4 and unit 5 all have to have a 20K price drop because they've established the market, right? That's what they're trying to avoid. Whereas if you work into a seller credit, they can keep it at that target price point, not impact all their future sales, but still give you some incentive to move. Now, new builds are tricky because you're paying retail price. You're not getting a market discount because builders are very firm in their sales prices. But there is an opportunity there where if you are targeting a property that's going to have very little maintenance in your first year owning it, it's brand new. A lot of times it comes with a builder warranty, right? It could be a very good opportunity to get in with a low operational cost and take advantage of these builders that are panicking a little bit, right? Have them pay your closing costs, have them buy your rate down. And when
Yeah.
we're talking about getting a 6.25 or a 6.5 rate, if I have 20K of builder funds to pay down your rate for it, you're getting a rate in the fives, right? Maybe the
Yep.
low fives even. And it gives you much more flexibility where if you're pre-approved with your lender at a 500K purchase price and this new build's at 550, that may be above your threshold, but that's assuming you get the market interest rate, right? It
Right.
may be within your threshold if you can use that builder incentive and buy it way down. So obviously there's opportunities everywhere. Builders, I think, are a very unique one where, like, I don't personally with you, I don't really care if builders are struggling or not. I care about how my buyers can take advantage of it.
Sure.
Like, just being transparent with you,
Sure.
right? And if a builder struggling is going to lead to my buyer saving tens of thousands of dollars in interest over the course of a 30-year loan, good. I hope they struggle, right?
Yeah.
Let's get
Yeah.
better deals for our clients. Um, but yes, to answer your question, just generally, I am seeing some builder uncertainty, and it's usually displayed based on these incentives that you get when you buy. And whether or not that's the quote unquote canary in the coal mine, that could be a question that's brought up, because the downwind effects of that is that builders just stop building,
Yeah.
and that's a problem, right? And that's, I have my personal opinions on things that the government should do to uh, incentivize building, and to, maybe some tax credits, maybe some state run programs, something that gives these builders a reason to continue doing this instead of just taking these big haircuts that they're doing at the end of their deals. Um, and that's a whole political debate of, why are we giving builders more money? But in theory, you do that and it increases, the opportunity of people to buy homes. It decreases the housing gap, and ultimately gets more people homed, and that's what we all really want to see. I want everybody to see owning their own property, right? I think that would put America in a much better position.
And I know you are such a champion for real estate agents investing in obviously cash flow properties, which obviously there's so many benefits to doing that, but there's also a skill set to learn. And many agents really only work with primary buyers and sellers. They only have a primary home themselves, and they don't really know the lingo. They don't understand you. Even in high interest rate environments, we're making lots of investments in the last 12 to 24 months. You continue to do so rates don't really affect you much. I guess obviously they're important, but at the end of the day, you're looking for things like depreciation, tax advantages. You're looking for cash flow. Walk us through just a little bit about how you, and also, by the way, you look all over the country. You're also not somebody that just looks locally.
Yeah.
And to be able to make something work in another state where someone else is managing it is, it even that even increases the skill level, I suppose, or the difficulty. And yet you do that consistently. So not to give away, do a whole course, of course, here on this episode, but what do you look for when you're looking at properties to invest? Because I know you're always looking.
Yeah, I mean, I have kind of my buy box, so to speak. And I teach people how to set up their buy boxes. I would say there's not one that's always going to be the best fit for everybody, because there's different levels of risk and reward, right? My investing strategy is a little riskier, admittingly, but I've determined that risk is worth taking for the potential reward, right? I'm a short-term rental investor, so I provide, vacation amenities. I believe in providing a good experience. I do not target typically more suburban areas, because I don't really want to take homes from people who are living there, right? I target vacation destinations. I target places where people don't really live, up in the middle of the Smoky Mountains in Tennessee, for instance. Nobody's like living there. Nobody's living in a big cabin, right? Those are typically places that people go to for a vacation, for an experience, for, an opportunity to get in one with nature, get in touch with nature, or whatever the case is. Um, so I do have a big challenge with the surge of Airbnbs, and kind of a moral dilemma there, that I don't want to be taking grandma's house and turning it into an Airbnb, right? Which I think people should pay more attention to, because even though the numbers may work, like, what are we really accomplishing there, right? um but just in terms of my buy box, obviously I do look for cash flow, but it's not the only thing. I look for value add opportunities. So places that I can get into lower than the market, get some seller credit, get some repairs done, increase the value of the asset. And really my biggest motivation in investing is the tax benefits. And that sounds like, a capitalist, and regardless of your political, affiliation, there are very defined codes and opportunities in the tax code that allow you to, really the American government is incentivizing investment,
Yeah,
right? That's the way to think about it. And if I can put $100,000 into the down payment of a property instead of sending it to the IRS, I'm going to do that every time,
sure.
right?
No,
There's
nobody
never
pays a dollar more in taxes than they need to.
Exactly. And all these people that you hear, brag, if you guys are, following real estate people, like, Robert Kiyosaki always brags that I don't pay taxes because I'm smart, or Trump said that, right? Trump said, like, I remember when he was debating Hillary Clinton, he said, I don't pay taxes because of the system you created, right?
Right.
It's not like these people are brilliant. It's not like they're paying, their CPAs hundreds of thousands of dollars to commit tax fraud. They're doing one thing and one thing only. They are depreciating real estate.
Yeah.
That's it. That's the secret. There's no crazy special tax code. There's no workaround. There's no fraud happening. They are depreciating real estate, and they are wiping out their personal income for that. Right.
Yeah, and you can front load depreciation in a
That's
lot
right.
of cases.
That's right. Yeah, I mean, I can run through the numbers of my property that I bought. I bought it's about a 1.5, $1.6 million property in the Smoky Mountains. Very nice cabin. It probably won't cash flow. Probably won't, being fully transparent, right? It'll probably just cover the mortgage, and that's about it. Maybe even have a monthly expense to me. But it gave me a $350,000 tax write-off. So like, I don't really care if it cash flows, because that was,
Sure.
probably $150,000 to $200,000 that I was sent to the IRS instead. Instead, I put that as a down payment on the property, and I actually got something back for it. What do you get for the money you send to the IRS?
Yeah.
Debatable, right? But I don't feel like I get much, so I'd rather that go into a property and fully legal, not doing anything weird, nothing, morally ambiguous, right? I'm taking advantage of the incentives that the IRS has put in the U.S. tax code, which is allowed, right?
Yeah, it's really interesting, and there's all sorts of opportunities where even if somebody doesn't want to do short-term rentals or long-term rentals or deal with managing a property or even paying someone to manage a property, there's syndication deals that you can get involved in, and those are really interesting. I find those to be sort of investing light, a little bit less risk. You let another group do all the heavy lifting, and you still get to appreciate, or sorry, you still get to take advantage of the depreciation. And there's a lot of good reasons why people do that. And you basically buy shares of a trust that's doing like a commercial development or a commercial a retail center, for example.
Absolutely.
And I've found there's all sorts of really cool ways, and agents would do themselves well to learn some of these tactics and strategies, because really they can bring that to their buyers, their primary home residence buyers, to increase, their net worth through passive investing, or even just reduce, like you said, your tax liability for your primary income. I mean, geez, if I could reduce mine by 200,000, that would be a really nice day. And we're always looking for opportunities to do that. Where are you seeing in short-term rentals? Are you seeing still a lot of opportunities in various markets, or is that getting more saturated now since Airbnb is so popular? Obviously, there's just more investors or more people willing to take those properties and do that short-term investing.
Yeah.
Or short-term rentals, is that more challenging these days?
I would say it's challenging for probably reasons that people wouldn't anticipate. I don't think it's oversaturated. I think it's undersaturated with good ones, oversaturated with bad ones, right? In the same way that I let off with, everybody was trying to convert grandma's house into an Airbnb. There's a reason why that didn't work, right? But providing a unique experience in a unique market that stands out, there's still a supreme lack of that, right? I don't know how much you travel, DJ. I travel a lot for work. I stay in Airbnbs when I travel. I don't remember the
Oh
last
yeah,
time
I
I was in.
always do, almost always do. Yeah.
Yeah, I don't remember the last time I was in a hotel, and
Yeah.
I can count probably on one hand the really good top of the line experiences that I've had in Airbnbs, and it's unfortunate. I haven't experienced very many good ones, and that's something that if that's your desire, you should do it in a way that, number one, doesn't take homes away from regular home buyers. But number two, if you're going to do it well. It's just like anything. Like, I wouldn't recommend you go to work and like half-ass your job. Like, if you're going to work good, right? Work well, shoot for that promotion, potentially pick up overtime, whatever the case is, right? Anything worth doing is worth doing well in my book. And a lot of people, instead of trying to adhere to those kind of standards, they pull up AirDNA and they look at cash flow and they say, oh, cool. Well, that looks easy. And it's not. And people get dismayed by it, and people get, they beat themselves up because they failed. But really, you failed in planning, not executing. You just didn't plan it well. So for people who are looking to do that and actually provide a value, I do not think it's oversaturated at all. I think there is plenty of opportunity for good operators. And that goes with long-term rentals too. How many long-term rentals do you know that people like really love their landlord?
Right.
Like, probably not very many, But the ones that do pay their rent on time and have a much better experience, right? Like as a landlord, you should care about how comfortable and confident you are in your tenants. You should. That's a big impact of success in investing.
It's funny. One of the little sort of funny sort of truths about short-term rentals, which I wouldn't have guessed because I'm not a short-term rental investor myself, but that actually the wear and tear on properties tends to be much less than, which of course makes sense if you think about it, than long-term rentals, because they're in and out of there in a couple of days. They're not putting as much stress on the property in most cases. They're not utilizing all of the different rooms and amenities. They're in and out, but it's kind of funny to think that more traffic is coming in and out of there, but you potentially are maybe holding on to that property for longer than even having a great tenant in there, 12 months of the year.
Yeah. Well, you're also checking in on it more, right?
Yeah.
In between every stay, you usually have
Yeah.
a clean.
Good point.
So like if you have somebody who, pops a leak in the bathroom, and the sink or the tub or the shower head or something leaks, a long-term tenant may just say, "Oh, it's not really a big deal," and let it leak for 12 months. And like how much damage is done over that time. Whereas if something pops a leak on a 2-night stay, you're seeing it after their 2-night stay, right? Your
Yeah.
cleaner, your manager, your maintenance tech goes in and says, "Oh, hey, problem, let's fix it." So your response rate is much quicker. Now, obviously, if you have a really good, responsible tenant that notifies you, then that's, kind of remedied a little bit there. But it's forced on a short-term rental, right?
Yeah.
Your things are brought to your attention. Now, it sucks because your operation costs are heavier because you're fixing things more often,
Sure.
right? But it limits those huge expenses that come from significant, neglect that happens when somebody stays there for 12, 24, 36 months at a time, right?
Yeah. And, it's again, just the idea, if I was an agent that was looking into either getting into short term rentals or long term rentals and just trying to find my first property, whether it's in my local area or in the case, what your buy box, you're looking in vacation areas for short term. Where would you recommend I start researching? What would be my first step? What would be the first place I should go to just increase my knowledge set?
Yeah, number one, I would talk to somebody who does it.
Yeah.
You're going to skip so many mistakes by just simple talk to somebody who has done it, right? If you're interested about the lending portion, talk to me. I'm an operator as well. There's a lot of services online. I know a lot of influencers, people. I wouldn't go pay for a $10,000 or $20,000 course, probably, right? There's plenty of them that you can go send money to, and they'll give you a buy box. But there's a lot of free information as well, right? I'd educate yourself first, second, and third priority, and then start to execute your plan only once you have at least a base level amount of confidence, and you're being advised by a good team, right? Somebody who knows the system. Talk to some property managers, right? Talk to an investor minded agent in the area, right? If that's you, increase your knowledge about investor minded purchases, right? Um, it's the power is in your network and your knowledge almost in every aspect of real estate, even if you're buying your primary home, right? The way that your agent negotiates, or you being the listener as the agent negotiate, like that's like half of the success of the borrower's, game plan there is what you buy it for,
Yep.
right? What the terms you get on it is, what your structure is when you first enter, right? I mean, you can do all the post-purchase things you want, all the renovations, all the thing, but if you didn't buy it well, the whole thing could crumble, right?
Yeah,
Um,
I even it's funny you're talking about, finding experts in your local area. I am looking to make a move here in the next 4 to 6 months, and I just called the top agents in the area that I'm looking to buy in, even though I'm technically an agent and I'm not going to be using them. I called them and I said, "Hey, I'm moving into your area. You're one of the top. You have some of the most market share in this area. What do I need to know about buying in this
yeah,
area?" Wasn't sure that they would talk to me because technically, I guess I'm competition in a sense, or if it's one of their listings, not. But I wanted to know their secrets. I was shocked. They were like, "Oh, this is what you need to know." I
it's
was
weird. They will
it
give it away for free.
absolutely, and the same
Absolutely.
on the investor side. It is. especially investors. Investors really love to talk to other investors. They love to knowledge share. They love to just network because again, they trade properties sometimes as well.
That's
It's
right.
this network of not everything hits the MLS, and there's a lot of properties that sort of are through just backdoor channels of people who are networked together. Certainly, investors are that way as well as developers. So yeah, great. Great thing there. I think our agents or our listeners rather, who are agents, should be reaching out to you, even for their primary home buy. In fact, especially for primary home buyers. We really appreciate you reaching out to Christian. Give his team a chance on your next pre-qual. Reach out to him, the1brokerage.com. He is truly an expert in all things lending, and he will not only does he have this knowledge, he has access to tons of different lenders. So he goes and shops it out. He looks for the best opportunities, the most creative ways to get your clients to the finish line. And he's just the guy to do it. So reach out to him. Visit the1brokerage.com on your next buyer deal. Let him be even your backup offer. Even if you already have a lender you're working with, let him show you what he and his team can do. They really are truly remarkable, and they have a lot of credibility from all the experience. And Christian is just the man. So Christian, we would thank you once again for another great episode. On behalf of Christian and myself, thank you to everyone listening. Please check out the1brokerage.com. We'll have a link to that in the show notes. Follow Christian on his social media channels. We'll have links to that too. And on behalf of all of the audience and myself, thanks to Christian for spending time with us today. He is a busy man and busy brokerage owner, and he's always comes once a month to share his knowledge and wisdom with you. Thanks to our sponsors, and also thanks. We really encourage everybody to share this episode with a friend. Think of another agent that is struggling right now. It's a tough market, so send this episode to them, and also leave us a review on whatever podcast app you're listening. We appreciate that and read your reviews, and are always looking to improve to meet your needs better. So, all right, Christian, we will see you next month and see everybody on the next episode.